Similar. Um, I'll be doing a lot of house papers, preparing everyone for the upcoming junior exams. And this is for grade 10s. These are papers I've set for my students and you guys, obviously, just to make sure that I prepare you for the upcoming junior exam. The first two questions will be just short exercises, basically just to emphasize certain things that most students don't get right, especially the things that they learn in grade 10 and then when they get to grade 12, they have forgotten about them. So I will basically also recommend that grade 12s watch this video to make sure that they familiarize themselves with some of the grade 10 content that they probably forgot. Let's get to it. When the business sells goods, please note that four accounts will be affected. And when the business sells goods, it's either it issues an invoice. Sometimes they call it a cash invoice, which is just a receipt, but most of the time it will be a credit sales invoice. Credit sales invoice is a source document that you give a customer when you sell goods to that customer on credit. And the sale of goods on credit will affect four accounts. Normally, whether you sell them for cash or on credit, it will affect four accounts. The first account, if it was sold on credit, it will affect debtors control. Debtors control, it is an asset account. Please check out definitions for grade 9s where I explain what an asset is. An asset, it is a resource that you use to generate money. It's a resource you use to generate money. Now, debtors control, it is the resource you must own it, you must control it that you are going to use to make money. And these are the people that you have sold goods to on credit. To convert them to cash, to convert your debtors control to cash, your credit customers must pay you back. However, here we sold goods to our credit customers on credit. And since we sold goods to them on credit and debtors control is an asset, debtors control will increase at selling price on the debit side when goods are sold on credit. If they were sold for cash, bank will be the one that increases on the debit side. These two accounts will increase at selling price. So when we sell goods, those two accounts will be affected. Okay, I don't want to say those two accounts. One of those two accounts will be affected, all right? Depends on whether we sold those goods on credit or we sold them for cash. The second account that will be affected will be sales. Sales is income. Income increases on the credit side. And the definition of income says that it increases in assets. Obviously, we have debited, debtors control, and bank. And increases in equity or decreases in liabilities. Here, it's not really decreasing any liability, but it is increasing equity rather than increases due to contributions by the equity, those that have equity claims, all right, and or holders of equity. And because it meets that definition of income, it will increase on the credit side at selling price. Sales is income, it increases on the credit side, as I've said. I don't want to get deep into those definitions. I've explained them thoroughly in grade 9 already. By now, you should be familiar with the definitions. Otherwise, check out the definitions in grade 9, um, in one of the grade 9 videos, written definitions, where I explained everything thoroughly. I think it's written analysis of transactions, or it's just definitions. I think it's just definitions. All right. The other account that will be affected, it will be cost of sales. Please note that cost of sales is just your trading stock that we have converted into, let me say, trading stock that we have sold. That's what it is. All right. So it is just your trading stock you have converted into an expense. So when your trading stock is sold, it is converted into an expense. I hope that makes sense. So cost of sales is an expense account. It increases on the debit side at cost price when goods are sold. Increases means it's a plus. Plus, plus, plus. Increase is plus. So in this case, it will increase on the debit side at cost price. Cost of sales will increase at cost price. Cost price is the price we paid when we bought those goods that we are selling. That's what cost price is. It's not just the price we paid, it's any other attributable cost that made it possible for us to sell those goods. Okay. So all those costs that they will comprise, we add them together and then form cost of sale or the cost price of the stock. So when we sell that stock, that trading stock changes to be cost of sales, which is an expense account. All right. And that's what the definition of an expense is decreases in assets, which is a decrease in trading stock, and decreases in equity rather than distributions to those that have equity claims. All right. And obviously this one will increase on the debit side and it reduces owner's equity and it's only a distribution to those that have equity claims, or to the holders of equity. Now, it's an expense that increases on the debit side, as I've said. It increases on the debit side whenever we sell people. Whenever we sell, it increases on the debit side. The other account that will be affected, please note that cost of sales will be recorded at cost price. The other account that will be recorded at cost price will be trading stock. Trading stock will decrease because we have sold goods. Trading stock is an asset. So when we sell stock, it decreases on the credit side because it's an asset. Okay. It is an asset account. Trading stock will decrease because the entity is losing goods or merchandise sold. Trading stock will decrease at cost price. Now, when you pair this, please note that you will pair these two, okay? These two must be at cost price and those two must be at selling price. All right. Obviously, subject to number one being either debtors control or bank, depending on how you sold those goods. I hope this is making sense. All right. Guys, please, when you watch the videos, make sure they don't skip the ads. Thank you again to everyone that has subscribed to the channel and that always watches these videos. I really, really appreciate it. Around 13,000 views every week, more than 3,000 views. Actually, every week, every month, it's more than 13,000 views. Obviously, UP20 still leading. Thank you, Tony. Thank you, Tony. I think it's funny and Joe Wagner. Thank you, guys. I really appreciate it. I see Soweto is coming through my hometown. Thank you again for watching. From Lenasia, Borky, Loli, and Adele. Yeah, I'm from Borky, so yeah. Thank you for supporting. And thanks for to everyone. Darren is coming through as well. I really appreciate it. Number two being Cape Town. Thank you. Kapstad. Let's move on. The second one, guys, will be return of goods. When goods are returned, it still affects our accounts. Do you see the accounts that we just did when goods are sold? It is just the opposite of those accounts. Now, remember in the when goods are sold, we normally debit debtors control, okay, or we debit bank. Obviously, when goods are returned, we will credit bank and we'll credit debtors control. Okay. Bank is because we give them the customer a refund if they purchased for cash. One activity, I think it was a grade 12 paper. I think it was 2017 or 19, somewhere there. No, it's not that far actually. It's 2020 or 2021 November. They were talking about Mr. Ngidi, even though they mispronounced it, it's Ningidi or something. You see, when I prepare these notes, it's because I know I saw it somewhere in a past paper. And that's what will happen when goods are returned. So remember, when we sell goods, we debit these two accounts. When goods are returned, we credit them. Now, the problem is normally we credit sales. So we're supposed to debit sales. However, guys, accounting doesn't allow us to do that. It comes up with is a counter or the opposite of sales. The opposite of sales is just debtors allowances. It's an expense. It doesn't matter how you look at it. You can say it's an expense account. It's up to you. Or you can say it's a reduction of sales. It's still correct. It still makes sense. All right. That is because income is decreasing because you are not earning that income anymore. Goods are being returned. All right. And debtors allowances, it reduces sales. Accounting requires us, when goods are returned, to record them in debtors allowances. Why does accounting do that? Why doesn't it just say debit sales? It's because it wants to track how many people are returning goods. So this is very important materially. We need to show it separately because it's very, very material. If this figure is too high, it tells us that the quality of the goods that we are selling is not good. Because that's why people return goods when the quality of the products is inferior. So we need to do something about it. That's why we don't debit it to sale. We create a separate account, which is called debtors allowances. Okay. Unfortunately, guys, I'm not the person that will teach you exam techniques and stuff or how to pass. I'm not that person. There are other YouTubers that can help you if you want to memorize. Here, you need to understand what you're doing so that even if they can ask it in whatever language, in whatever way, you should be able to answer it because you know the concepts. All right. I'm teaching you the concepts, and that is the key. Once you understand the concepts, it will be easy for you to answer any question. All right. Um, and yeah, just like I've said, you treat it like an expense account or reduction of sales, and that's it. The other two accounts, remember, and when you look at the general ledger in grade 10, I explained this as well, that cost of sales will decrease by the cost price of goods returned. It increases when we sell and it decreases by the cost price of goods when they returned. And trading stock obviously will go up because those goods are returned. So we're having our goods back. If it wasn't our fault, it was the supplier, we're going to return those goods to the supplier. It will reduce now in when we return them to the supplier, it's another two accounts that are affected. We debit creditors control because it's a liability. Liabilities decrease on the debit side. Please check out grade 9 videos because I explained that thoroughly. All right. Um, and you credit your trading stock because you're returning goods back to the supplier. I also recorded a video not long ago just on this. I think it's a Word document. I was doing it with my students, I think. It was in support class, yeah, where I explained all the entries that have to do with sale of goods and return of goods. Please check that out. Now, let us look at this example here. Um, Basically, this is how the June exam will probably look like. All the general journal entries, they'll have their own question in the general journal, but it won't be that hectic. I know my students think it's that hectic. Um, when you, this is about Boza Limited, okay, Boza. Boza Limited is a company that sells scones at a markup of 25% on cost. So basically, I used to sell scones, guys, on the street corner somewhere in Mayerton, Corner Lodge, next to Standard Bank. Yeah, used to sell scones there. Um, still a nice business actually. On a day, I'll make like 500 Rand on a good day with obviously customers that are loyal. And I also used to sell them by Department of Education in Mayerton. Yeah, by the street lights. I used to sell them there. Obviously, I have a lot right now. But when I get a chance, I'll probably go and sell because it's just free money, you know. In a week, you make how much? 2.5, I think. Yeah, you sell, wow. Just that electricity is becoming very expensive now. But anyway, we are given pre-adjustment trial balance for the year ended 29 February 2024. We have sales, we have cost of sales, we have debtors allowances. Those guys I'll just, especially when it comes to debtors allowances, I'll take them straight to my statement of profit or loss. I know that a lot of accounting teachers call it the statement of comprehensive income. Unfortunately, guys, that is incorrect. It is called the statement of profit or loss. Other comprehensive income, it's when it has to do with the changes in valuing the asset and stuff. It's second year, third year, if you want to be a chartered accountant. Okay. Obviously, guys, me, I will teach you everything so that you understand what you're doing. Even when you get to varsity, you still understand what you're doing. You don't have to start from scratch. I think I hate this thing when people say that if you want to be a chartered accountant, you don't need accounting when you go to varsity. I want to create that need that you need accounting when you get to varsity. It makes easy for you. You have people that say that I passed my BCom and I'm a CA today because I didn't do accounting. Yes, it's because they're smart. Good luck to them. But they're actually people that passed because they did accounting in high school. And when you get there, they say, forget the things you learned in high school. Don't forget them. The definition of an asset doesn't change. It stays the same. It's just that I made it a little bit easier for you. Obviously, it's a little bit complex according to conceptual framework. I don't know why sometimes lecturers say such things. We get taught by them. I got taught by Warren Maroon, Dr. Warren Maroon at Wits. So whatever he taught me, it's what I will teach students. So if you go and study become at Wits, it's what he taught me. And when he says forget what you learned in high school, what is he saying? Because he's the one that taught me what I taught you. Um, so basically, guys, I'm gonna take my sales and subtract 7.5. Okay. And I think I explained this thoroughly. I told you that debtors allowances will decrease sales. It decreases sales. Okay. But we show it separately. I explained why we show it separately. And that is the only thing. Everything else was entered for you in the statement of profit or loss. All right. I'm going to go straight to the adjustments. Adjustments simply tell me that there might be something wrong with whatever is in the pre-adjustment trial balance. For instance, it says here, Boza Limited issued a credit note, and I also dealt with credit notes. Check my videos on debtors journal, where I explain debtors journal, debtors allowances, what a credit note is. When we issue a credit note, it means that a debtor returns goods to us. And when a debtor returns goods to us, guys, it affects four accounts. Four of them. Four of them. All right, unless they return, unless the credit note is about reduction, claiming an allowance, which I discussed as well. When you claim an allowance for any allowance, and I gave you examples of what could constitute an allowance, there is no cost of sales. So only two accounts will be affected in that case. But if it's a return of goods and you're not claiming an allowance, it affects four accounts, guys. It affects four accounts. Okay. So the first one will be we debit debtors allowances. When we debit debtors allowances, we are simply reducing sales. So I'm just going to subtract sales, the selling price of these goods that were returned, and which is 7.5, which is 15 million. Sorry, it was 15 million. Yes, it was 15 million. At the same time, I'm going to, because they were returned by a debtor, you also need to pay attention to that. If it's a cash customer that returned the goods, you basically subtract bank. But here it is a credit customer. It therefore affects your trade debtors. You're going to go to your trade debtors and subtract 15 million, right? And that's it. Okay. All right. The other two accounts will be obviously here. I'm just giving the selling price. They said obviously they were returned by K Naidu as they were not ordered by K Naidu. This transaction was not recorded. That's why we have to record it. I didn't even read the entire thing. Um, I'm gonna take that 15 million rand and find the cost price, and then there's a markup up there. I also have a video, guys, where I showed you the table. It's a markup percentage table so that you can know if you're given gross profit, how do you find cost of sales? If you're given gross profit and the markup, how do you find cost of sales? If you're given sales, how do you find cost of sales? If you're given cost of sales, how do you find sales? If you're given gross profit and a percentage, how do you find sales or how do you find cost of sales? So just go there and practice that because it's very, very important. It makes your life way, way easier. Okay. Now, here, since I'm given the selling price, which is 15 million rand, I'm simply going to take that 15 million rand and multiply it by 100 divided by 100 plus the markup. Here, the markup was 75. Yes, 75, I think. 25, sorry, it was 25. So I will just divide it by 100 plus markup. And this will give me the cost price, which is 12 million rand. Now, that affects two things. Cost of sales must decrease because goods have been returned. And again, trading stock must increase. But here I didn't do trading stock. I haven't done trading stock yet. I will do it probably in the next 4 weeks before the June exam. And all I'm going to do is to go to my cost of sales. And when I get to my cost of sales, I'm simply going to subtract that 12 million rand. And that's it, guys. That's it when it comes to Sale of goods and returns. All right. Let us go to the second adjustment. It says rent received for March and April 2024. Rent increased by 30% on the 1st of November 2023. Now, guys, this creates a problem because March and April 2024, they don't fall within the current financial year. And according to the conceptual framework, it says income must fall within the reporting period. It must be something that we earn within the reporting period. The reporting period is just your financial year, guys. Okay. And here, March and April is not within the reporting period. It is outside the reporting period, but we have earned that money. So we basically are renting out our premises and we have earned money for, we have not earned, we have not earned that money for April and March. April and March 2024 fall outside the financial year. I need to repeat that. Now, someone can say, why don't we just take that 1,106,000 and just divide it by 14? We can do that. But the problem is this. The rent was not constant. It was not constant throughout the year. It increased by 30% on the 1st of November 2023. Obviously, these percentages, guys, you do them in grade 8 maths, all right? That is because I teach grade 8 maths. Maths is also fantastic. Now, the increase, how do we deal with this? First of all, guys, you cannot do this unless you draw the timeline. Timeline, your reporting periods. For me, show me what your reporting period is. Your financial year starts on on the 1st of March 2023. It goes on and on and on. I don't expect you guys to do this in the exam, actually. There's no time for this. I've seen my students normally write MAMJJASO blah blah. I feel like that's also a waste of time. With me, when I do this, guys, I just write the beginning, which is 1 March 2023, and then I write the 28th of February 2024, and that's it. Everything is in between. It's fine. And then I pay attention to where rent changed. So rent was the same throughout, and we don't know how much it was. That's why it's very important for you to do maths. If you, I had a comment a long time, a bit while back, I think, where I think it's an accounting teacher who asked me, so how do you teach this to students that are doing maths lit? And my argument is that actually this maths, this X maths, because I teach maths, this X solving for X and a linear equation, you do it in grade 8. So whether you're doing maths lit or you're doing pure maths, you did it in grade 8. However, I gave you an alternative. You go check videos on rent income or rent expenses, where I gave you an alternative. It's just a table. It's the same as this, to be honest. I just removed X's and I put them as a table. Yeah, yeah, that's what I did, right? But it's the same as this method over here. So what I did here is that I realized that it was a certain amount from the beginning of the year until November. Okay. And you need to pay attention to when it increased. Did it increase at the beginning of that month or did it increase at the end of that month? So here you'll realize that it increased on the 1st of November. So November will count as after the increase. And anything before November is before the increase. So before the increase, you don't know what rent was. So that's why in grade A maths, I need to emphasize that we say it was X per month. For how long? It's March, April, May, June, July, August, September, October. I don't count November. Let's count. It's 1, 2, 3, 4, 5, 6, 7, 8. That is 8 months. So it was X for 8 months. And then thereafter, it increased by 30%. When it increases by 30%, you take that X, you multiply it by 130. How did I get 130? That X, it's already at 100%. You just add the 30%. So now it's at 130. And that happened from November. So it will be from November, December, January, February, March, April, which is 6 months. So for 6 months, it was, sorry for that, it was X at 130. And it will give you the rent income. So because you have received all of this, right? All of it was received. So you are going to equate it to 1,106,000. But there's a problem with that one, and I will explain it at the end. Let me just simplify this. When you take 6 and you multiply it by 130%, people, guys, there's a thing called calculator, okay? So you just take 6, okay? 6 just like it is. and then you multiply it by 130, all right? And then you come here, you press shift, you press this percentage, and then you press the equal sign. There it is. And then you change it from that fraction to this. It gives you 7.8 x. So you're supposed to know this. That's why I'm saying six. You multiply six with 130 because those are numbers, and then you keep x as it is. So you just attach it to 7.8. So that is why here you'll have 8x plus 7.8x is equals to 1,106,000. And then that 8x plus 7.8 will give you 15.8. And that will be equal to 1,106,000. And you just divide by 15.8, and that will give you 70,000. But this X is rent before the increase. And we want rent for those 2 months that don't fall within the current financial year, which is March and April. We need to deduct those months because they don't report. By including them, we incorrectly overstated our income because conceptual framework states that it must be earned within the reporting period. Period. So you're going to increase the 70,000 by 130%, and it'll give you 91,000. So we don't want two 91s, which is the one for March and April, and that'll be 182,000. That is your rent received in advance, which is a liability. As I've said, it was 70,000 until end of October. From end of October, it became 91,000 rand. So I'm going to take that 182,000 rand because I do not want it. Ne? Here I'm just showing you how it works. I do not want that 182,000 rand because it falls outside the financial sense. Understand that I increased the 70 by 30%, and then I multiplied the increased amount by 2, which represents the 2 months that fall outside the financial year. So it was 91,000 for November, December, January, February, March, and April. But March and April, I added those 91,000, and they gave you 182,000. That 182,000 represents my income received in advance. Note that because it's not income, I haven't earned it. I haven't provided these guys property to stay for those 2 months because that is for next year. I need to report income for the current reporting period, the current financial year. Okay, so what I'm going to do is to go to my rent income. And when I get to my rent income, I am going to subtract that 182,000 rand. And I will get 924,000. That's my income earned. Why is it income earned? Because it's income that I have performed a service for, all right? And because I've performed a service for, I've earned it and I deserve those benefits, that money. I don't want to say benefits because now I'm going to make it a little bit complex for you. I've earned it. It's what I have performed within the current financial to earn it. So I deserve it. That's why I recognize it as income. At the same time, that 182,000, it is a current liability. And I explained this again in grade 9. Guys, my basics, my students know high school. Guys, grade 9 is very, very important. You need to understand those basics. Because if you don't understand the basics, you're gonna struggle a little bit. You won't understand what I'm saying income, when I say expense, you'll be confused. The accounting equation is very, very important for you to make sure that you master this content, especially in grade 10, 11, and 12. So now it is a liability. Liabilities, guys, will be current liabilities are recorded in a note called trade and other payables. And I'm going to record it there, which will be trade creditors, which is your creditors control, and I will record it as income received in advance, or you can write it as deferred income. It's the same thing, and it'll be 182,000 rand. We owe those people. They paid, but we haven't provided a service for them, which is accommodation in this case. Got it? Yeah. Just don't forget this, please. Please, please don't forget this. Um, yeah. The next thing you forget it, and then you get to grade 12. You're like, yo, grade 12 is so hard. What we get taught is not even coming out. We are self-studying. Nah, remember what you learned in grade 10. Okay. Um, and that's it with rent income. I'm gonna go to insurance. This word here, guys, is very important. So included means it's in there. It's within. As you guys normally say, we are within. It's within. So when you look at your insurance expense, as I've said, guys, whatever appears in an email account section, it comes from the journal. Okay. So when you have insurance, it means you paid it, so it was in cash payments journal. So that 360,000 rand, you have already paid for it. But the problem comes in as to we have already said our expense is 360,000. And as I've said, according to the conceptual framework, it says expense must be incurred during the reporting period. It results in decreases of your assets and increases in liability during the reporting period. And according to the matching principle, it must be recorded during that reporting period. But now, once we have paid for something that is not within the reporting period, as I've said, guys, it's a financial year. That is a problem. That is a problem. We need to take out the months that don't fall within the current financial year. But they made it easy. They say in that 360, there's a 90,000 rand. So now people want to subtract the 90,000 rand and calculate what falls within the financial year and include it. But now they forget to account for what we have already paid, which doesn't fall within the current financial year, because that also kicks in another definition, which is in this case, it will be an asset, something you have paid for but you haven't received a service for. So those people owe you. You need to disclose it in your financial position. You got it. So basically, here our expense needs to decrease. And by decreasing an asset and an expense, we recognize an asset. That is fascinating, don't you think? When you increase an expense, you de-recognize an asset. And when you decrease an expense, you recognize an asset. Amazing. That is so cool. Anyway, it says which was paid on the 1st of January 2024 to cover for Boza Limited until the end of June. Now you're gonna count for how long we're gonna be covered by the 9th. It is January. Oh well, it's 6 months. Why am I even counting? Um, but of those 6 months that we paid for, how many fall within the current financial year? We actually, I don't even care about what falls within the current financial year. I care more about what falls outside the financial year, outside the reporting period. We're not supposed to recognize that as income yet. Okay. And as I've said here, I've just explained why two months fall within the current financial year. Okay. Because it was paid on, let me just revisit that. It was it paid on the 1st of Jan or 31st of December? Let me check. It was paid on the 1st of Jan. Awesome. So if it was paid on the 1st of June, it means that for that 90,000, only 2 months of that 90,000 fall within the current financial year out of the 6 months. But now we don't care about what falls. What falls within the current financial year is correctly included in that 360. The problem is what falls outside. It must go out. Sure is. All right. Sure is, all right, until 30th of June. So this was for 6 months. 4 months fall outside the financial year. Within that 360, we have paid 90,000. Part of 90,000 doesn't fall within the current financial year, which is 4 months out of the 6 months. Guys, okay. A lot of people just divide by 12 without reading that this 90,000, it was for 6 months. Do you understand what the denominator is for? It's a whole. The whole is 6 months. The whole period will be 6 months. And part of that whole will be 4 months that we don't want. And that 60,000 rand, guys, will be subtracted from our insurance amount because it represents a prepaid expense, which is an asset. So what we're going to do here, because we have paid for it, but we haven't really been covered for it. Our chair making sure. So I'm going to go to my insurance, which is in the statement of profit or loss under operating expenses. And I'm going to subtract that 60,000 rand because it can't be an expense. It's outside the reporting period. So we have to subtract it. And that will give you an actual expense that we need to recognize within the reporting period, which is 300,000 rand. Is that it? It is? Oh yeah, it is. Actually, it is. Awesome. So what I'm going to do now is just to add everything up. So when I take 250 million minus 7.5 million minus 15 million, I prefer to write the range, or you can just write them here at the top, and then you don't have to write them like I've done. Okay. And this will, and let me just close that off. It'll give me my income, which is 227,500,000. And my cost of sales will be 188 million. Guys, please note, and I fight with my grade 12s all the time. That cost of sale. Do you see it as in bracket? They don't write it in brackets. I don't know why. It's an expense. We have to write it in brackets. Expenses reduce your income. Otherwise, you can't calculate your profit. Put it in brackets, in brackets, in brackets. Just put it in brackets. So you're going to take your sales and minus cost of sales. That's why we put it in brackets so that you know you need to minus it. And a person will compose, I got it right. You didn't get it right. You didn't put it in brackets. Guys, brackets are very important when you prepare the statement of profit or loss. They're very, very important because they mean you are reducing your income. That's what they mean. Expenses reduce your income. If it's not in bracket, it means that is income. So you are reporting it incorrectly. Okay, so that's why your gross profit here. Gross profit is just sales minus your net sales minus your cost of sales, which will be 39,500,000. I've already calculated rent and insurance. Let me just add up everything under trade and other receivables. What do I have under trade and other receivables? I forgot to recognize this. A prepaid expense from that insurance, which was 60,000. I forgot to record that. Sorry for that. And then you're going to take 70,000 minus 15 million. And that will give you 55,000. Add it with the 60,000, you will get 115,000. And then for your trade and other payables, you will add 450,000 with 182,000. It will give you 632,000. Okay, and I guess that is it from me. All right. If you want to keep in touch, feel free to keep in touch there. All right. If you let me give you this activity, try it out on your own, and then check out the video later on. Okay. It's pretty much similar to what we have done, but there are a couple of twists there and there. Uh, try it out. You will use that to prepare this and that. Whoa, what did I show you there? Oh, thank God. Um, and okay, and this. Okay. Yeah, that's what you need to prepare. That's what you need to prepare. All right, and then check out the next video for solutions to that. Alrighty, guys.